Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Dave Childers. Dave is a multifamily broker based in Tennessee, and he has brokered over 450 multifamily properties. Additionally, Dave has been investing in real estate for over 15 years, and his most recent acquisition was an 86-unit apartment complex in Pensacola, Florida. So thanks so much for being on the show, Dave.
Yeah, thank you so much for having me. I appreciate you having me on as a guest.
No, for sure. Thank you. What was your background prior to starting to invest in real estate?
A college dropout. I pretty much went from being a college dropout to doing this. I did move to Nashville, Tennessee in 2003, I believe, to work in the music business as a road manager for some bands, and did that for about a year and a half. And then, just decided that bus life and being on the road was not the life I wanted. And so started buying flip houses in 2003, 4.
Okay. And then why did you choose real estate as an investment vehicle, going from your background prior?
Yeah, I was a finance major. I've always enjoyed learning about money, and I always wanted to be an entrepreneur. And then growing up, I had just some family friends who were pretty well off. That either did construction or real estate sales, and again, had a high school education. They didn't have MBAs. They weren't Harvard grads by any means, and they did very well financially, and they had freedom. And that's really what I saw. Growing up, I had my best friend's mom. I think she attended more of my basketball games. She was a residential agent, had a couple rental properties. She would take me to basketball practice. And then I had my father, and this kind of rich dad, poor dad story, right? He had a great pharmaceutical job, pharmaceutical sales rep, I guess what everybody shoots to have. But just was, busy all the time, had really no time, no freedom, no flexibility. And I really wanted the freedom and flexibility.
Yeah, for sure. The older I get, I feel the time freedom is more important than the financial benefits at some point, because it's not something you can get back.
Oh, absolutely. I mean, I think that's key. I always said, I don't care, it really wasn't a dollar amount what I made. I wanted to do something I enjoyed, and then I had that freedom and flexibility to do it. So, real estate just fit that, and it's not for everybody. I've learned that over the years. You really have to have the right personality and the right mindset to be self-employed and then do real estate as well. So it's not cut out for everybody.
Yeah, if you have a 9-to-5 mentality, it's not going to work. My dad was telling me years back, and he was self-employed as a real estate investor, and he was saying that if you want to work and stop at 5, like real estate, being self-employed is not your thing. It's something that, especially with real estate, where you have tenants, clients, 24 hours active in properties you own, you have to be there unless you have some system in place.
Right. And so I guess the freedom is, I can be vacationing in Florida or vacationing up at my farmhouse or whatever and still work and be able to take those calls. So that's, my family's had to learn that. My kids know, hey, dad's got to take a business call. They're in the back of the car, be quiet, let him take this call, because him taking these calls allows us to not, have this trip that we're on, but then not be in the office. So they know that, and they've learned to, work with me on that kind of stuff. So.
Nice. So can you tell us about your first couple investments, what they were, what went right, and what went wrong?
Yeah, I started off like a lot of people, just buying duplexes. I think that's most people's logical step. Let's just buy some duplexes and, build a little portfolio and, pay it off, have it all paid for eventually in a couple years or 20 years. And so that's really where it started. I started teaming up with people, partnering with people. It was before the word syndication, was really popular, or raising, all that, I'd say it's sophisticated, right? A guy came to me and said, I'll buy it with you. You manage it. We traded kind of our skill set. I was going to manage the property. He was putting the down payment, and we were, we partnered, 50-50 on those. And so we did that a few times, and that's really where it started. Was duplexes, small duplexes here in the Middle Tennessee, Nashville area. And some of them I was kind of getting out of the flipping and moving into the, more the multifamily or buy and hold strategy. So some of these were actually wholesale deals that I wholesaled to our group. And then we end up holding them for, 5-6 years since we've sold them. So that's really where I got my start.
So currently, what do you look for when you're underwriting and analyzing properties? Your strategy? What's your goals?
Yeah, what I've learned after selling hundreds of multifamily properties. So, I was an investor first, and then a broker friend here in Nashville said, Dave, you need to start a firm that just specializes in selling the smaller to mid-sized multifamily. And so we've kind of carved out a niche over the last 10 years here in Nashville to sell. We've sold, I don't even know what the number is. It's probably 500 or more. 50 a year, 5, 10, 15, 20 unit complexes. And so what I've learned doing that is everybody kind of has their different, criteria of what they're looking for. I meet people who are very, very high net worth. They don't want fixer uppers, right? They want something that's turnkey. They don't have time to manage it. Then I have this friend, Ed, and I always used to say Ed would buy the house that has the tree growing through it, right? And he did. He'd buy the $12,000 house that had a tree growing through it. He liked that kind of project where I have doctors and attorneys and business owners are like, man, I don't have time for that, right? So my criteria, and I had to get over this as a sales agent, right? My criteria of what I buy and what I'm selling are probably two different things. I'm a value add guy if I can find it. I like kind of what I call like a micro value add. I don't want to do these big renovation projects anymore. I want to tweak little things and create value that way. I'm still that 50 to 100 unit. I like those size deals. We know how to run them now. Something that still has meat on the bone, where there's some mom and pop type, operations going that we can come in there and fix and cure those things.
So you spoke a little bit about your brokerage and how the niche you have, and that's great because I have a friend of mine that has a similar size brokerage here in Florida that with the niche of what they're focusing on, because normally you'll find with multifamily, let's say in particular, the brokerages will be all over the board. You'll get an email for a 7 unit and you'll get an email for a 700 unit. So can you expand on that business and why you started, other than having the niche? What were the other reasons when you were out in the marketplace beforehand?
Yeah, so I mean, I tell people we're a hybrid, right? You got commercial and residential, and we're kind of in this middle. I tell people residential agents kind of need to stay out of our space because they don't have a clue. Most of them, let me just disclaimer, most of them, some of them do, but most of them have no idea. You'll see the terminology cash cow, or, they'll throw all these cliche terms around and you're like, you don't even know, you have no vacancy rate in there. You have no reserved, you're running at 100% occupied, and they don't know how to run a cap rate. They're running on a gross number. So again, it frustrates me a lot, these residential agents, because I think, they're going to screw with some people's life, right? If they sell them a multifamily property, thinking you're hiring an agent who knows what they're doing. Sorry, there's ambulances going by my office. You sell a property and you got a client who's trusting you to that you're providing professional knowledge, and you really don't know what you're talking about. And then you've got commercial agents that, hey, are like, man, I sell 50 million. Actually, my buddy said, I've got billionaires on my email list. I cannot sell them or put out a 10 unit complex, right? So we've just kind of created a great referral business. A lot of those guys, they get the call from the 10 unit, operator, and, they end up referring it to me. And now I've kind of, after doing this so many years, really figured out the differences, how you finance, how you manage a 10 unit versus a 100 unit. And so the bigger brokers and operators will call me sometimes, or appraisers, and say, how would you underwrite this? Or how would you look at it? How would you manage it? And start kind of picking my brain and asking us those questions. So, there's a lot of differences though. I mean, you buy a $800,000-$900,000 apartment building, you're going to have to probably get a bank loan, right? Mm-hmm. Where you go to $1.5 million or $1.2 million apartment building, and now you're qualifying for Freddie or Fannie SBL. So, financing's different, managing's different. You can't have a property manager sitting on site on a 20 unit complex. So you got to get a little bit more creative when you're doing it. So that's what we've carved out. I had a real estate license. I was a residential agent when I first started buying multifamily, and I hated that. I hated taking people, sorry, but I'm not a warm and fuzzy type person. I like numbers. I like returns. I like making money, right? And so I didn't like when I walked somebody in a fixer-upper house. I knew they were walking into $50,000, $60,000 in equity, and they didn't want it because they didn't like the paint color, right? I just like wanted to pull my hair out. So, you kind of find that's what I love about real estate. You kind of find what you enjoy doing. I enjoy numbers. I enjoy showing people how to increase the value, how to increase the NOI, how to kind of play around with cap rates and all that. So it's kind of, kind of found me, I guess, in a way.
Yeah, no. And I can side with your friend Ed there. I once bought a property with a hole. You could look right into the trees through the roof.
Yeah.
And before I closed it, I had one of my contractors come over and drape the whole house with a blue tarp. Because I was like, oh, we're buying this thing. We're putting above asking, all this kind of stuff. And a lot of people don't want to, they don't want to deal with it. They don't know what they're dealing with. And especially higher net worth people that are looking more for a stabilized property, it's going to be a whole different asset they're looking for. Right. But so you work with a lot of new and seasoned investors within your brokerage. What mistakes do you see investors commonly make?
That's a hard one. We pride ourselves on coaching people. Really, I mean, that's kind of this residential investment advisors come in. We don't just help people buy a property and say, well, good luck, we'll see you in a couple of years. We really hold their hand. So I've had a really good success rate with our clients, just, being very successful in this business. Because again, we're providing them with all these resources, and I'm always just a phone call away, right? To answer questions for them. If they're self-managing, I see mistakes when they're self-managing, maybe sticking with a management company longer than they should, cutting ties with them. I do have one. The biggest one I see is not raising rents, right? And leaving a lot of money on the table when it comes to cash flow, not charging additional fees, right? It's kind of your classic mom and pop, right? You're going to go and you find a mom and pop operation and they've got the property 100% occupied, mistake number one, and then B, they're, way off the market rents, right? And they've become friends or, with the tenants and they don't really want to push rent. So that's probably the most common mistake I see among people, is that mm-hmm. those kind of two things.
Yeah, no, I see that. It's when you're penciling it out and you can see it, the rents are below and you can see how they've been managing it. It's not really managing it, but just not raising rents and just keeping it people aren't going to leave, right? So if you keep the rents really low and they go, oh, I always have 100% occupancy and everything's so easy and everybody's nice. Well, if you're paying 25% below market value for your rent, you'd be really nice too. And you would never call them when something broke, but that's not how you maximize, a property.
Well, there was one time we were selling a small complex and the owners, I said, look, you're like $200 off market on these 1-bedroom units. And we kind of went back, well, I don't know. I said, you're exactly right. You don't know what the market rent is. I said, it could be $1,000 more. You really have no clue because you've never tested the waters to figure out where that market rent is. So sure enough, we sold the property. There was 4 of those tenants that were $200, $250 off market rent. They sent them all 4 notices saying we're taking your rent up to market. 3 of them out of the 4 decide to stay, right? So just a quick calculation, 200 times 3 tenants times 12 months, and then apply a 5 or 6 cap rate, it's probably $100,000 in value that owner lost. That again, where we deal in this kind of space of small multifamily, we deal with a lot of mom and pops. We're not, dealing with the syndicate or the big large firms that own thousands of doors. So I've met people that don't have P&Ls. They don't have a separate bank account. They don't have leases. They have leases, but they're out of date and they got verbal agreements with tenants on what they pay. So again, we've actually got a buyer's guide. If anybody wants to, or a seller's guide, if anybody wants to email me, I'll send this just a seller's guide, just kind of the top 10 things that I think you need to have when you're getting ready to sell. And some of it's simple and some of it you're going to think, what, you've seen that? And I have. And it ends up costing the sellers sometimes millions of dollars in value by not having bank statements or P&Ls or rent rolls. I mean, that's some of the most simple stuff. And so we try to, if somebody's thinking about selling, we're trying to work with them to make sure they have all these, ducks in a row to get ready to list it.
Right. Because if you're buying that, you're going to have to recreate those documents. So we were underwriting a property years back and their accounting was done on the side of their business bank statements.
Oh my God.
And you're like, you got to be kidding me. So if I'm going to get a deal on it, we'll go through and we'll put this into a spreadsheet. But it just goes to show you that they didn't even put it. They wouldn't even open up, your free Excel spreadsheet and pop some numbers in there. Just working out who owed what on a bank statement, which is normal. If you don't have to account to anyone and it's your property, you own 100%, and you just need to pay taxes, insurance, and your mortgage. No one else is looking over your shoulder if those are paid. So, so if a new investor, let's say, reached out to your brokerage, interested in investing in properties, what could they do to show you that they were a serious investor that would warrant your time, showing them properties, sending them properties, everything you do with your clients?
Yeah, I mean, I think it's a lot about, effort, right? Are they just going to call us and expect us to send them, the best deal right away, right? When I've got a huge buyer's list and, seasoned people that I've worked with for years. We were just on a Zoom call a couple nights ago with Julie Holly, a lady I know, and we were talking about the same thing. How do you get into brokers? Make a point to go visit them, get in the car. Like if you're in a different market, you really need to go there and spend time. So we have people from California, they'll fly to Nashville and spend the weekend with us. We'll show them properties. We might not have the property that they're going to end up buying, but we'll show them something that would fit into kind of their criteria, right? This is our price range. This is the kind of, we want a C or B property. We like, newer construction versus old, and we'll spend that time with them. But again, they're showing us the effort. I've got a coaching student right now, and we're looking at other markets. I'm kind of teaching him these things. You got to go there. You got to meet with brokers. Go look at properties. Give them feedback on what you're seeing and why you can't pay a 4.5 cap for that property. Give them that feedback, and they'll start seeing that you actually know what you're talking about, and that you're responsive and that you're serious. But again, it's follow up with the brokers. We have people that call us one time and then they think that they're just, on our list. I mean, we can't keep up with, when I'm buying, when you're buying. Oh, I don't have the money. You've got to keep following up, not bug them, not call them every day, but, maybe, every other week, 3 weeks. If you're serious, don't waste their time. You're not really going to be ready to move on things. So I'd say those are, don't call and say, I'm looking for owner finance deals, right? I mean, those are, I went to a seminar last night, and don't BS us. I hate that, right? I mean, I've been doing this long enough. I've got a pretty decent portfolio of my own. I can sniff you out so quick if you don't know what the hell you're talking about, right? So I'd rather have you call me and say, I don't know anything. I'm getting into this. Will you help me? Versus, somebody that's going to spout out all these terms that they think they know what they mean, but they don't. And I think the real genuine people in this business that I've met, if you have that attitude, they will take the time with you and teach you and lead you in the right direction.
Right, for sure. Yeah, I agree. With commercial brokers, you can use a good commercial broker for finding all the other parts of your team, really, with all the referrals and everything with it. And when people ask me about speaking to new brokers, I would always say, well, be very exact in what you want. I like this city. I like these neighborhoods. I want 6 to 18 units. I want this. And I remember, like you said, going and meeting them. I went one time to meet a broker, and I left with an 18 unit off market deal. Yeah. That they were giving me before it went up and they listed it. But so it's very, very powerful. And I asked him, you want me to sign something? He said, no, don't worry about it. And it was like the amount of trust you had with just having coffee with someone is amazing. And I mean, that's a little bit more difficult today where we are, but it's something that, you can do it in other ways, but kind of being exact of what you want, because someone says, I want to buy multifamily. Well, is that 60 units? Is that 6 units? Is that 600 unit portfolio? I mean, it doesn't, that doesn't mean anything.
Yeah. I mean, is it student housing? Is it Class D? Is it LIHTC? Is it low income? Is it Class A, urban? I mean, what is it, right? And so, I think that's very, very good information right there. Be as specific as you can on what you're looking for. And then, if you're serious, then you should be able to be serious enough to come down here and meet with me and put the effort. Don't, well, I got a 9 to 5. Well, I'm sorry. Like if you're talking about buying a couple $1 million asset, you should be able to find the time to come meet with me and my team. And then, yeah, resources, that's a great thing. We try to, when we're getting ready to list a property, we're doing it right now. We'll go to our insurance agent that does mostly multifamily. We'll go to our Freddie and Fannie lenders. We'll get the property manager on board and really try to, almost have all these resources. So, we're really just looking for someone who, brings a down payment and qualifies and, really create the whole business or help them, do as much as we can on the front end.
Yeah, that's awesome. And speaking about having other resources, it's one thing that we don't hear too much of with, we were talking a little bit beforehand in regards to asset management, and how important is asset management or managing your property manager, when I say asset managing, when investing in real estate?
Yeah, I think this is one of the things that maybe is lacking in education right now. And I've been trying to do some asset management and just basic classes here in Nashville, is because I think you can go to a seminar and you can hear about financing and meeting with brokers, but meeting property managers and the maintenance guy and understanding what their day looks like and, the expectations that you can put on them. They're great. They can be, your team makes or breaks you, but they're not Superman and Superwoman, right? They can only, there's only certain things they can do. So, get in there. I take people through our shop and show them, what kind of extra things we have in their tools. When somebody walks in the office, how are they greeted? Where's our make ready board? All those kinds of things. I think if you can understand this business and that's why I tell people, I learned it from the inside out. So my first large asset, I was the property manager, the maintenance guy, the lawnmower, the pool guy. I knew how to snake out lines for years. And so I was a leasing agent. All those different roles I've played. So I kind of, I'm not an expert, but I know enough now to give direction and know what I'm asking for. So again, get to know how the business works on a day-to-day operation is key. Because it's going to protect you in the long run if you actually know what's happening on site.
Yeah, no, I agree with you. I self-managed my properties for many years before having a third-party property management come in. And I was, staking the lines. I was, everything with bleeding out furnaces, the oil furnaces, the whole 9 yards of all that stuff, getting a call on Christmas Eve and all these kind of things. And I think with people today, or I see it a lot with a lot of the training programs, is that there's not much emphasis on self-managing or learning the business from the inside. You might know about what it says in a book, but you don't know when you're looking face to face with a tenant and they're signing a lease and you're showing them the parts of the lease and what they should do. You've never collected rent that's late. Yes, you got the property manager do that, but knowing it is a very important part of the business when you're investing in the real estate, or have someone on your team that has that experience.
And it makes you appreciate a good manager that much more, right? You're like, I'll pay you more, right? Because you're just so good. And I know how valuable you are because I've sat in that seat. I know getting those calls at midnight are not fun. So let's figure out how to not get those calls. And, so it makes you really appreciate the people on site that work for you. And, it's funny. I've become like a tenant advocate, right? Like, I believe in taking very, very good care of our tenants because they're the ones that pay our bills. And so, with the firm, I've fired clients who I find out after the fact are slumlords and not fixing things. I don't want my name on that, right? These are the people, that pay our mortgages, pay the salaries, pay the taxes for us. And so I'm a big fan of taking care of a good care of your tenant. So, and a good manager, again, if they're doing that, you definitely need to show them appreciation for that.
Yeah, exactly. So what recurring traits do you see in your most successful property owners that you guys work with, whether through the brokerage and or outside of it?
Yeah. So, I don't know if I should share this, but we actually kind of have an internal grading of people when they come to us. Because I've been doing this so long, we kind of just know personality traits. I'm not going to share them all, but, there are a lot of them, somebody that's an entrepreneur already, right? That has a business, started a business, is running a business. They're a very easy person to say, hey, here, because essentially what we tell people when we sell even a duplex, right, we're selling a small business. And so, or a 10 unit or 100 unit, every property is a small business. So people that have already started businesses and kind of know how to set up LLCs and talk to insurance agent and kind of knock tasks out like that, honestly, they move up to the top of our list, right? We have people that I'm not going to name them, but have certain types of jobs that are kind of risk adverse and they can never, they overanalyze things, right? And Rod and I've talked about this at the mastermind. They're compounding problems onto each other. So, they're sending us offers at 50 cents on the dollar, and they'll never get past that. And so, our best clients, again, I'd say our business owners and entrepreneurial type of people. And then there's these people that they're just never, going to get over some of these concerns they have.
Yeah, the analysis paralysis, or where I see it too when I speak to new investors, is they get really cheap on setting up stuff, so they don't want to set up I'm like, you guys have another LLC for this or that, and they go, well, I can't use this and that, and the amount of time I just spent with you explaining this, right. The $200 that you're spending. I mean, this is all the whole process of what you're working on. You know what I mean? And some people just don't see that. They don't see value in certain things that I think small business owners and or real estate investors see, because they experienced it before. They know people that experience issues, and they know what has to be done to provide against that.
So two things. When you come to meet with us here in Nashville, we're going to sit down with you, and we're going to have probably an hour conversation, and we'll dig down to see if it's a good fit, right? Yeah. What your risk tolerance is, right? I tell people I've got hundreds of thousands of dollars in mortgage payments, that I sleep great at night, right? There's a lot of people that could not take on that risk, right? So we want to sell you something that you're going to be able to lay your head down at night, fall asleep, aren't going to be a worrywart about this asset, right? The last thing I want to sell you something that, your life is miserable because you can't stop worrying about it. So we're going to spend that kind of time with you. And that kind of goes back into what kind of asset you're going to buy. Is it, this nice, clean, perfect, maybe a higher end B property, or, you can lay your head at night owning a D property. I mean, it really, is, and we'll just show you options. And then secondly, what I've kind of created here in Nashville is, if you want to buy something small on your own, great. But if you just want to place money, then I have Cedar Rock Capital, and that's kind of what we're doing, more capital raising for larger assets. So you're like, I understand the concept. I want to be in multifamily, but I don't want to be active, like owning a duplex through RIA. Well, we've got kind of alternatives for you.
Yeah, and that's usually the right way for a lot of investors that have a very demanding 9-to-5. And their W-2s taking up a lot of time, where they have a successful business, where it doesn't make sense for you to come out and have the meetings with you and analyze the properties and put together the rest of the people to complete the deal, complete the puzzle, and kind of get it running how it's supposed to with no experience, where it'd be easier just building out your current business and your current job.
Right. Yeah, right. Exactly. I've got a guy I know, and he's got a great successful business. I'm like, man, you just need to keep producing income, and then use, multifamily. You got the concepts, you understand, you've seen what I've done, but use that as your investment tool, your passive investment tool, right? But your money maker, your income producing is the small business that you're starting to grow. So, keep focusing on that.
So what do you think are the main factors that have contributed to your success?
Oh, man. I listen. I have a lot of mentors. So like I would not be here without people who have, those guys that first partnered with me, right? They were house flippers out in Northern California, and they said, Dave, probably one of the best things that we can say about you is that we taught you a skill, and then you actually went out and did it. They said the reason we charge people $10, $15, $20,000 to teach them this is because most people don't take us serious, and they'll never do anything with it. So we make them pay us to show how serious they are. And so they taught me about house flipping, and the next thing I did is I came back here to Nashville after out there a couple weeks with them, and found a lake house that we ended up selling for $650,000, which was our first flip when I was 24, 25. So I think that I just get shit done. Oh, I shouldn't say that. But I don't wait around, right? I know time is of the essence. Let's do it. Let's knock it out. Problem solve. That I'd say that's one of the things that I contribute to some of my success. So.
Okay, awesome. So how can our listeners learn more about you and your companies?
Yeah, so I always do this. I was on Rod's podcast, I was episode number 4, 4 years ago now. So I give out my cell phone number. It's 615-479-8737. I'll assume you'll put that somewhere. You can email me, Dave at ria-inc.com. So you can check out Residential Investment Advisors. We're working on a new site. Find me on Facebook, Dave Childers. Cedar Rock Capital, cedarrockcap.com, so the capital raising company. So, but again, if you just want to text me, call me, find me on Facebook, message me through Facebook, I'd love to connect.
Awesome. Well, thank you so much, Dave, for being on the show today. And I will put all those links in the bottom. So looking forward to connect with you in the future.
Thanks again for, putting on this podcast and having guests like us.
Thank you. Have a great day.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Harborside Partners Incorporated exclusively.